Good morning everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today we'll look back at asset market performance from yesterday, but primarily thinking about UK assets and how they performed yesterday. So just looking at equity markets overall globally, they continue to make positive territory yesterday, building on what's been a positive week given the start to the week we had on Monday when we saw that weakness in equity markets. So gradually recouping those losses that we saw at the beginning of the week. Looking at markets in general then yesterday, it was very much a function of what was happening in the FX markets, so the currency markets, and what was happening in the sovereign bond markets. Really, the sovereign bond market was the talking point given how yields both in the UK and in the US moved yesterday, with yields moving up. The main starting point for that, if you will, in the UK was very much around the information that we got from the Bank of England, the MPC, post their monthly meeting of interest rate policy. And from the MPC we heard now that we have two members wanting to reduce that quantitative easing programme. So Dave Ramsden joining Michael Saunders in that vote, wanting to reduce the quantitative easing programme from 895 billion to 840. So an indication of their direction of travel. We also saw within the commentary, the bank commenting that they saw the conditions starting to improve such that they could start to potentially make some tightening measures to the financial support that's being provided to the economy. So that fed through into interest rate expectations. So when the central bank will move interest rates was brought forward to sometime of March of next year. That saw sterling strengthen on the day. It also saw the 10-year gilt in the UK move out to 93 basis points. Quite a big move if you think where we were just at the beginning of the REIT, around that 80 basis points level. So that then fed through into a number of other markets, and we saw a very similar move in the US, with the US 10-year moving out from that 130, 132 level up to the end of the day where it closed at 143. It's just worth noting in the US's case that we did see equity markets continuing to push on positively as well. With that change, it really did support those more economically sensitive sectors as the yield curve steepened. So we did see financials, both the UK and in the US, performing well as a sector yesterday. The other thing just to comment on this morning is back to China, the discussion around Evergrande, the property developer that we know has been causing concern within the marketplace at this point. They have not made one of their interest payments that was scheduled. That technically means that they could move into default in the next 30 days. We'll see how that evolves. It is the Chinese situation. The PBOC are certainly managing it, and we've seen them inject more liquidity into the Chinese market this morning. I'll leave it there. Please do look out for the podcast that will come later today, and join us again next week. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.